You've got to keep trying to apply it with its different nuances. It's never going to look exactly the same as what we show. Nothing will ever look exactly the same. It's always going to be a variation on a theme. But obviously the idea is we need to know what the theme is. In other words, we need to read the Viper pit trade setup as a story. And if we read it as a story, we learn it as a story. We don't need to see all the pieces of the jigsaw to know what the story is. So when we see the vPin, of course, this is the perfect examples that we showed from yesterday, where we saw the pin area here and it became a vPin area here. And then we saw the setup coming in here on the retest, and then the retest, and then the retests. They're perfect. They are a perfect sequence of Viper pit trade setups. The series is correct, but they don't always have exactly the same setup. They don't always have exactly the same structure. We've got to be aware that not every turn in the market is going to be the big bell gets rung by the commercials. Not every turn gets rung by the commercials. Sometimes they do and sometimes they don't. We noticed on the NASDAQ that there was a big absorption print after the top edge was in. We noticed on the S&P there was massive exhaustion prints after the turn came in and then the absorption print. So not all setups are identical. So if we look at the order flow, for example, on the NASDAQ first, you'll notice on the NASDAQ on order flow, you'll see that we got the absorption right there. But the day started with absorptions at the bottom edges. Do you see them? And the key to this is that when you see absorption, guys, get the POC and draw a line, right? So you can see there's an absorption here. You can see where the POC is there. You pick up the POC and you draw a line. And the reason why you do that is because there's a buyer at that price. Now, you might want to wait to see if there's any verified buyers at that price. And then when the price retests this area 2 minutes into the cash open, the smart money seems to be incredibly bullish. No shit, Sherlock, it's the same price. You see it? It's the same price. And all of a sudden, you take your long position against that story. As soon as the market leans, you get the bid in and boom, you make some monies. When the price comes down here, you're not really getting a story. It doesn't really give as much, but again, it reverses out and boom, you get some more money. And then when it retests, a buyer comes in at slightly higher prices. Slightly higher prices. The smart money still seems to be bid at that stage, and you're looking to see whether you can verify that that's genuine into the two same prices there, and you find another buy trade. So you take the POC to the bottom of the candle, because that's where the absorption must have taken place, right? That's what the reading's telling us, the bottom of the candle, not the top of the bloody candle, the bottom. So you mark off these areas, you extend these areas when you see it coming into these areas here, you extend the area so you know that the buyer's in this area, not a single price. And obviously the outcome was this brilliant buy side pop. It was $1,000, Theo. That was $1,000. It took you 3 minutes to make $1,000 on that buy side pop using that order flow storyline. That is pretty good going. And then we saw a seller coming in here. You see them? So the seller must be the high price area. So you're looking for the POC to the high price. Now, unfortunately, the POC is at the, well, not unfortunately, but the POC is at the bottom of the candle here. So you're obviously going to mark that area as a seller. And you're going to be watching for a sell opportunity in there. And my goodness, did you get one? Boom. And then you got another seller coming in here. You never saw any buyers here. I mean, they came out eventually, but you never seen any buyers when it first tapped this. And there was a seller right here. And you're saying, well, that's a seller on a down move. That's really powerful. Buyers are always going to be at the bottom. Sellers are rarely at the bottom like this. And obviously, based on that storyline, you could then say, well, I've got a seller at that price I'm going to deal. And there's another seller there, and there's another seller there. Do you see them? And obviously, sellers in those areas highlights the area, doesn't it? So we see sellers there. We then see sellers there. So we're highlighting that price area there. And we're just drawing the level across our charts. Why? Because it's important that we do that. It's important that we recognize that there was some real sellers. Now there's a buyer here, so we know that we have to get that space, but there's always going to be buyers at low prices. So it's not catching your eye as massively unusual. You acknowledge it because you don't want to sell it when there's an absorption at the low price. So you've got to give it space to sell back in if you want to go short. And then there's another big seller coming in there. Do you see them? 0.14, guys. Unbelievable. Now, the one thing you also want to do with this, guys, is add volume. Why do you want to add volume? Because this might be 0.14 based on 3 contracts. Know what I mean? It's not going to be a 0.14 based on 3 contracts because you can't do that as a ratio. But, you know, it might be based on almost no contracts and you get a very, very low number. So you're absorbing like 5 contracts. Well, there's a lot of you guys that can absorb 5 contracts on your own. You don't need the market to do it for you. So, you know, we've also got to try and remind ourselves that volume is a component in this type of trade idea. You get another absorption here and you say, well, that's again into the spring trade. That looks obvious. And you now expect the price to fully press to the bottom edges, and it fully presses to the bottom edge. And now what are you starting to see? A buyer showing up. Again, not unusual. You expect to see buyers at low prices. A buyer showing up. Not unusual. A buyer showing up. This is not coming off a low price. This is after the low price is made here. So this could be a stall coming in here, couldn't it? So you can see the order flow giving you this idea. That's not a buy trade that I want to note. That's not a buy trade I want to note. But this is a buy trade I want to note. It's not at the bottom edge price. So this is something I do want to pay attention to as an order flow trader. I want to now recognize that there was a buyer in there. And just in case I want to sell it, Reeve, I want to note that there's a buyer in there, and it means I can get a little bit of distance between me and him. In other words, just separate yourself from that opponent right there. And obviously, if that's what you're doing, then of course, it's meant that if you have resold it in, for example, here, that's too low, isn't it? You're not going to sell it at that price there. You're going to give it that bit of space and then sell it at that price. You know, sell it a little bit higher. You see it? Sell it a little bit higher at that point. So when you see the seller there, that's not going to interest you because you're too close to this buyer. So you're going to give it that little bit of room up here if you want to get the short sell into the book. So we can start to recognize the idea behind this, can't we? We can start to recognize the story behind the narrative. And that's what's the most important aspect here, isn't it? Recognizing the story behind the narrative. And of course, if we can recognize the story behind the narrative, we've got a chance to make some monies. We can start using this idea going forward in pretty much every single market, can't we? Yeah. So we obviously want to pay attention to these ideas, guys. They are very, very, very powerful pieces of kit. If we have an idea that this is what's going on, and this is like oil. We might have seen a brilliant idea to buy some oil, but when there's so many buyers, it just changes my mind about it, and it just puts me off taking the deal, doesn't it? It takes me off taking a shot at it because it just is kind of rubbish. It doesn't really sense that there's a brilliant opportunity to make a big splash on that bit of business. So we've got to start building our ideas around individual pieces as they show up. If we don't have them around individual pieces, we acknowledge it, we move on to perhaps something else. We either decide to trade or we don't decide to trade. This is order flow. It's called order flow. It's just order flow. But order flow in its own right is what the floor traders are doing, and they glance up at the relative value. Charlie D glances up at relative value. So when Charlie D glances up at relative value, he sees what he wants to see. Is it bonds bullish? Is it buy side opportunities here? What am I doing in and around these areas? What am I going to be trading? And obviously, if he recognizes the opportunity in terms of the tape, then he trades it. If he doesn't offer, because I can't take a trade unless the tape gives me a story, guys. I can't take a trade unless the tape. That's why I wasn't able to go long oil. The macro might have been bullish, but everybody was long oil. I can't join that queue, guys. I can't do it. So that either gives me a short oil or I have to pass on oil. Do you understand the difference? So when we're looking for things like Pit Viper trades, of course, the Pit Viper is part of the Max project. It's part of the Max project. And did Max have this trade nailed? My goodness, did Max have this trade nailed? Big style. Let's just take a little goosey at it in a second. Let's get it on the screens first of all. Well, that exhaustion you would imagine is going to show up on your Max as well. You'd expect to see that exhaustion into the top edge showing up somewhere. And my goodness, it was all over your Max trade, wasn't it? Look. You see the exhaustion just using Max? You see it? Just exhausted up here, isn't it? Look, the algorithms haven't even tried to buy the NASDAQ, have they? They've not even tried to buy the NASDAQ. You get it? So when we see that they haven't even tried to buy the NASDAQ, well, what are you going to try and do? You're going to try and sell those higher prints. So what are we looking for? We're looking for that absorption or exhaustion into the high prices. We're demanding that opportunity. So when I draw in buy-side value against any of these or buy-side liquidity against any of these ideas, we're obviously trading this. Now, is this a Pit Viper trade? No, because it's just a straightforward sell, right? They haven't tried, well, you might argue they tried to cap it pre-market. So they obviously were trying to cap the price in here pre-market. And obviously they found some buyers coming in, but you can see from this understanding there that that is just simply just the market maker just holding the offer at the top edges, aren't they? Do you all agree? Market maker holding the offer at the top edges? Well, that lines up with what we saw in the tape, doesn't it? It lines up perfectly with the tape storyline that we've seen coming in, for example, on the, it was more clear actually on the S&P. Give me a second, I'll show you it. What does everybody see on the S&P at the top edges during that top line? What numbers do you see? Do you see very low numbers or do you see very high numbers, guys? Low or high? Kind of stupid, dumbass question, but we're going to ask it anyway. Massively high ratio. What does a high ratio mean, Theo? Puts Theo on the spot, and Theo crumbles into a pile and goes, oh, no idea, I don't use that software. Nope, massively high number shows exhaustion, right? Massively high number shows exhaustion. Well, you'd imagine that if this is what Max looks like here, you would imagine that that's exhaustion, wouldn't you? Because there's no faking buyers. You see it? There's no buyers at the top edges. Because obviously, if there was a lot of algorithmic buyers in here, you'd imagine that that wouldn't be exhaustion. It would be what? It would be absorption, wouldn't it? So we would imagine in this phase here that we're going to get an absorption. Do you see the difference? So we would be looking for the same absorption in here. Now, what we should see is we should see absorption in this candle here, right? You agree? So this candle here should have absorption, shouldn't it? So obviously we can start looking for that absorption. Now what we're looking at is the NASDAQ, of course, and what this chart is the S&P, but I just wanted to show you that exhaustion in the background. But let's take a look at the NASDAQ so that we're comparing like with like to see if we can actually spot that trade taking place. So we recognize that there should be absorption in here, right? Should be absorption at 1441. Well, if we look at 1441, what did we start seeing at 1441, 1442? Absorption almost on cue, isn't it? Bearing in mind that that 1441 candle finishes at 1442, right? Do you agree it's the same candle? It's the same bloody candle, isn't it? So we've got the same candle in the same area with that absorption coming in. with the market maker in complete control of the top edge for the sell to work. And obviously what happens? Well, the price starts to roll off of that, and we start seeing sellers even at lower prices into the drop, into the prior swing. So we can obviously see that there is a big swing here, and obviously it gets absorbed in this area here, about 1450, correct? So around about 1453, 1454, we see that there seems to be absorption. Now, we don't get the absorption, but we've seen absorption at that price already, that 0.5 in the background here. So we know that there is an absorption taking place in here. So we can recognize that that is still an absorption, and it might be a nice buy opportunity, but at this stage, we're not interested. It's a sell at that price. It might be a buy at lower prices. We're not dealing with that. And then we get our first ever flush trade. Yeah. Can we agree that this is a clear flush? Is that not exactly the classroom flush trade that we've always wanted to see, 1508? Well, if we look at what happens at 1508, what did we start to see at 1508, guys? Oh my God. Is that not incredible? Step back in horror, guys. That is exactly what you hoped to see at 1508, wasn't it? In fact, came in at actually 1506 in here. So when we saw it 1506, we started to see absorption in here. There's the absorption candle right there. You would have been able to look at that and say, well, I'm going to mark that price, because obviously that's that buyer that came in here, wasn't it? That's that buyer here. That's that buyer here. So you're seeing exactly what Max is showing you here, aren't you? You're seeing it. It's real. Does it ever turn into a pit viper narrative? Does it ever turn into a snake pit at the bottom edge? Well, we obviously don't have access to volume at the moment. It's not on that chart. So we have to check to see if there's volume arrivals into that pin area. And the idea, of course, is if volume arrives into that area, then we might be able to get a bit of business done. But obviously, we'll take a look at what happens afterwards. The price then tests into it. Now, this would have been a perfect Viper pit buy trade, wouldn't it? In here. Because what we're doing is we're retesting into that volume. When we look at volume in there, did we get any surge of volume? It's not brilliant, is it? It's not a brilliant surge of volume, but we're getting higher volume for sure. It's not exactly the kind of volume you'd look at and go, my God, there it is. One of the things that's just a pity, of course, is that this just became exhaustion, didn't it? It became just done in at the bottom edge here. Absolutely done in at the bottom edge. So it's not quite a pit trade, is it? It's not quite that same storyline that we had from yesterday. If we remind ourselves about the storyline, what happens is we get that story there. The market maker runs this sweep into the bottom edge after the pin zone, and we get the buy trade coming away from that pin zone. Yeah, we get that buy trade coming away from the pin zone there, which obviously was this vPin setup that we talked about yesterday, this arrival of informed traders that then exhausts into absolute nothingness. Well, they didn't really have to do the trade, did they? Because it had already exhausted into absolute nothingness. So when that happens, you're not going to get a perfect photofit copy of the trade, are you? Because the market makers were still on the offer, and the algorithms went strongly on the bid. And that's why the price didn't explode out of this area. Because if the price were to have exploded, we'd have got a very clear read on this. But obviously, it's just total blatant exhaustion down here now, isn't it? You can see we kind of got the trade there. Do you see it? We kind of got the trade. Remember, that's what we're looking for. Remember, on the Viper trade setup, we're looking for that drop in the red line into that area. Remember that? So that's kind of given us that ratio. And obviously that drop into the red area comes about from there. And it kind of puts us into the bottom edge buy trade there at 1516. Now, obviously, if we look at 1516 on our charts in here, there's feck all in there. There's just no kind of order flow that's screaming at us, buyer or seller. It's just, but the problem we've got is quite obvious. The market maker is not going to release this price at this stage. Do you see that? The market maker still completely controls the sell side. So if the market maker controls the sell side, where are they going to sell it from? Well, of course, you're going to look at that wholesale price at 550 and say, well, they're not going to let the price go bid at 550, are they? So what's going to happen is the price is going to run into 550 here, jam up here, and then take it back down to retest the bottom edge. And what happens to the trade? What happened to the trade? They took it back down to the bottom edge to retest it. So this story of the market maker in here was perfect in this area here. Now, you'd imagine that in this area, we should see some absorptions at 550, shouldn't we? Because we've got this strong rally in the algorithms and the market maker is selling to them, coming off that candle at the very top edge at 550. So we would be able to look at that and see if there was a huge element of absorption. And the truth of the matter was there wasn't. Now, obviously, there was a big absorption in this pin, and should that pin have turned red, you'd have probably been able to notice that there was actually a big amount of absorption. It's just the way the order flow calculates it, which is a little bit unfortunate. So obviously the sell back down into the bottom edge, there's a buyer in here, so you have to acknowledge that buyer just to make sure you're not getting in too soon or too late. And obviously into the bottom edge, nothing much is happening. Market maker hasn't gone bid. The market maker stayed offer for the bottom edge at the moment, haven't they? So market makers staying offered. So what are the market makers trying to do? They're trying to push the price back down towards the bottom retest. You can see that from your max here. The market maker is still offered here, staying pretty much offered here, staying offered here, and obviously trying to bring in the sellers into the bottom edge. And if they do, we might be able to get a buy trade reversal coming away from that price print. Makes any sense? Makes a lot of sense, doesn't it? So when we're looking at these as stories, we're obviously seeing a bit of a risk premium going bid into the bottom edges now. So risk premium is starting to improve for a buy trade in there. So that's good news. We like a better risk premium. Looking at the kind of bigger macro picture, you can see it was a little bit reluctant to go bid here, but obviously we got a nice strong buy in here, but the value got cropped here. And obviously a retest might just be needed to get that buy side trade back on our books. That would be beautiful, absolutely beautiful. So when we're looking for these types of trades, I mean, it's just one of those things, you know, we're not really seeing an awful lot so far today. There hasn't been any max trades just yet. But we've obviously got other clues, haven't we? We've got other things we can bring to the party when we're asking these questions. Now, remember, the whole point about the max process is we're trying to learn about the narrative. When you're reading or watching professional traders on you know, in print or whatever, you'll see that Bloomberg's and Reuters, they're always asking, that they're always stating things like traders are looking for a new narrative to buy into or sell into. And that's because they've ran out of narratives. You can only buy news when you can buy news, but eventually that news is old and you can't buy it anymore. So traders are always seeking a new narrative, and it's not always sure exactly what that narrative is, and sometimes there just isn't one. So what we do when we're looking for a new narrative is we look for example, our trade log. You'll see into trade log, for example, on 1514. NQ, market makers are adding bids below the market. Watch for trap shorts coming to trade into buy into right there. So we started to see that. We started to notice the knob program commercial buyers are coming in as well. So obviously if the knob is going to be bought, then we know that that's probably going to be bullish equities. So we can start recognizing that at 1514, we can start using those elements to try and find possible trades. So we can start going into the chart and we can say at 1514, I wonder if there's going to be a trade. Well, there it is. There's your buy trade there. Max is very bullish. We can take the long trade there and pop a little buyer in. Perfect. So this is what we start asking, isn't it? We start asking those very, very simple questions. What happened on the retest at 1520? NASDAQ, bids expected from the #1 global macro fund. NASDAQ, futures bids expected from the #2 option fund. So we had some bidders coming into the tape here. We're building a narrative, aren't we? 1524, we're building a narrative on the NASDAQ. 1525, NASDAQ, bids expected from the #1 global macro fund. 1525, bids expected from the #2 option fund. So 1524, 1525, we're being told that there's a narrative building to buy into the global macro fund bidding. 1524, 1525. Where were those buy trades? Where were they? Well, there's 1524 right there. So all of a sudden, you can see that we're getting global macro fund bidders at this price and global macro fund and option bidders at this price as well here. Well, that's pretty good, isn't it? And then at 1526, you can see on the tape, there's an absorption just above that price just there, isn't there? You see it? So all of a sudden at 1526, which is this crappy little blue candle here, we're recognizing the buyer showing up in here, aren't we? You see it? So now we're getting the total story. We're getting a narrative at that stage. And that resulted in a break from 503 to a high price there of 540. So that's a nice 30-point move. I mean, you're making $600 in about 4 or 5 minutes there on that sweep higher. So that was good, wasn't it? That was a great story that built into that as a narrative. And this is what we talk about when we're building narratives. We're just asking the right questions and we're watching to see what the question is being answered with. We can see sometimes there's a bidder and you can see an offer coming in at certain times as well. You know, we've got the JRT to tell us. What are the JRT traders showing us? For example, that we can see that the JRT traders are what? They're selling dollars, aren't they? You see that? 1529 JRT traders are selling dollars. Is that bullish or bearish equities most of the time? Bullish or bearish equities most of the time. If they're selling dollars, they're usually going to be buying equities. They're usually buying bonds, aren't they? So is that useful to see that buyer coming in? Is it useful to know that that's taking place as a build up to your story? 1529. There's 1529 right there, isn't it? So equities had already on this occasion gone bid, and that's okay. That's absolutely do dandy. It is just what it is. It's only just part of the narrative, isn't it? It's not the entire narrative. It's just part of the narrative as it builds. When we see the other parts to the narrative, of course, on the other markets, it's a little bit easier because we don't get as many pieces of information coming through. But of course, we are still very aware that they still require building the narrative, don't they? They still require building the underlying storyline.